The hidden credit score mistakes nobody warns you about. Have you ever had that strange moment where you feel like you're doing everything right with your money, and then suddenly your credit score drops? You stop and think, wait, how is that even possible? It's confusing. It's frustrating. And honestly, it's one of those financial surprises that catches a lot of people completely off guard. The truth is, some of the smartest financial habits can sometimes send signals that don't tell the full story. That's exactly why understanding how credit systems work is just as important as managing your money. Let's take a closer look. Imagine you're someone who loves staying organized. You open multiple bank accounts because you want one for bills, another for savings, maybe one for everyday spending, and another for travel. It sounds responsible, because it is. But in some situations, opening several financial accounts within a short period can create small changes in your financial profile. Nothing dramatic, but enough to make you wonder why your score shifted when you weren't doing anything wrong. Then there's the person who pays every single bill immediately. The second an invoice arrives, boom, it's paid. No reminders, no late fees, no stress. Sounds like the perfect customer, right? Ironically, some credit systems also value a longer history of consistent payment behavior. Paying everything instantly isn't bad at all, but it may not build the same payment patterns that lenders like to see over time, so being incredibly responsible doesn't always earn the extra credit you expect. Now let's talk about credit cards. Many people believe having several credit cards simply gives them more flexibility and security. If one card stops working, another one is ready. Makes perfect sense. However, multiple credit cards can sometimes make it appear that you have access to a large amount of available credit. Even if you barely use those cards, certain scoring models may interpret that differently than you intended. It's not necessarily about what you're doing, it's about how the data looks. And that's a huge difference. Here's another situation almost everyone has experienced. You're shopping around for the best personal loan, mortgage, or financing deal. You're simply comparing offers like any smart consumer would. You visit different lenders, you check different interest rates. When? You're just trying to save money. But depending on how those credit checks are submitted, multiple hard inquiries within a short period can temporarily affect your credit profile. From the outside, it may look like you're urgently searching for credit, when in reality, you're simply making a careful financial decision. Then we have those incredibly convenient buy now, pay later options. They're everywhere. One click here, another purchase there. Everything feels effortless. Because the payments are small, it's easy to forget how often you use them. But behind the scenes, these financial activities can gradually build a picture of your borrowing habits. Individually, they may seem harmless. Together, they may tell a story that doesn't fully reflect your actual financial responsibility. Another factor people rarely think about is moving. Changing cities, starting a new career, finding a better opportunity. These are all positive life decisions. But frequent address changes within a short period can sometimes appear less stable to automated financial systems. That doesn't mean you've done anything wrong. It simply means computers often analyze patterns without understanding the real story behind them. The same thing can happen when applying for everyday services, a new mobile phone contract, a broadband provider, a streaming subscription, even utility services. Some companies perform credit checks as part of the application process. Each one might seem completely insignificant, but together, they become tiny pieces of a much larger financial puzzle. And the strange part? You rarely see that puzzle while it's being built. You only notice the final picture. That's what makes all of this so surprising. There isn't usually a warning, no flashing notification, no loud alarm, just a quiet adjustment happening somewhere in the background. Then one day you apply for a mortgage, a car loan, a premium credit card, or even apartment financing. And suddenly you discover your credit score isn't exactly where you expected it to be. That's the moment people often say, "How did this happen?" The reality is, good financial habits are still incredibly important, but understanding how financial systems interpret your behavior is just as valuable. Sometimes it's not about doing more. Sometimes it's about making smarter decisions with better awareness. Knowing when to apply, knowing when to wait, knowing which actions actually matter, and ignoring the myths that don't. Because once you understand what's happening behind the scenes, you stop reacting emotionally to every small change. Instead, you make calm, informed financial decisions with confidence. And over time, that's one of the biggest financial advantages anyone can have. If you found this video helpful, don't forget to like, subscribe, and turn on notifications so you never miss practical money tips that can help you make smarter financial decisions. Thanks for watching Saving Money. We'll see you in the next video, where we help you save more, spend smarter, and build a stronger financial future, one smart decision at a time.